Okay, good morning, everyone. Today we are going to start a new unit which is called Business Taxation. And my name Anjum Satar and my email address anjum@ukversity.co.uk. If you have any question, please drop me email. I'll try my best, get back to you as soon as possible. Especially mostly, I'm checking most of emails Friday, Saturday, and Sunday, and I'll try during weeks as well. Okay, so this unit, learning outcome 1, is about be able to calculate the tax for self-employed, complete self-assessment tax return. Okay, hope so you all deal and you have a good basic understanding of the thing. So that's our unit, which is, I'll quickly go through the unit contents. Okay, so that's our learning outcome 1. Then we have a assessment criteria. We have a 1.1, explain the purpose of self-assessment, determine the taxable amount, given scenario. So we can pick any scenario of our choice. We've not been given the data here within this, and complete the self-assessment and assess the ethical issues. We know ethics, an accountant always deal with ethics, yes? Okay, so we need to look around the ethical side and explain how they determine the tax status of workers and evaluate obligation system tax imposes on the taxpayers, and so the implication of the taxpayer non-compliance. So that's all we're supposed to go through. Then the second lesson will go through calculate the taxable income corporation tax. The third will go through learning outcome calculate the VAT. And then we've been given underneath, these are all the keywords we call indicative content. So that's we need to be focused. So when we prepare our assignment, we need to go through all these, indicative content which normally embedded in our assignment. So that's we'll go through. Overall, our discussion will cover almost everything. But if anything left, that will be carry on because it's a learning outcome 2 and 3 is carry on our lab as well, some information across. So which we'll go through. Okay, this will start then. Any question from anyone?
Yeah, I have a question.
Yes, sure, please.
So I know someone that's retired on pensions, but she also have dividends. So I'm just wondering how you do tax returns for dividends, and when she sells her shares, the profit and that will be I recently done that in the last unit, capital gains tax. So how do you
Yes.
do the tax? How do you do the tax returns?
Yes, in a minute, we'll go through the rates and we need to look around the rates and then we'll go through the gains. Yeah? Then we need to pick the
the rates. It's just that I never done a tax return for capital gains and dividends. Do you do that as self-assessment for a retired person?
Yes, you have to declare, if you have any income from any source, you're supposed to be declared.
So the retired person has to register self-employed and do a self-assessment?
Yes, you do, self-assessment. If you have any other source of income, you're supposed to be declared in the self-assessment.
She's retired on pensions, so I'm not sure.
So it doesn't matter if she retired and pension, but if she has any other income like from property, from shares, from anywhere, yes, so she's supposed to be declared.
All right.
Okay, so any other the question, it can be across many questions which we'll go through. If we want one-to-one, we can go through as well. Okay. We can go through in one-to-one as well, so we can look around more in detail. Okay, so because the scenario can be different in different situations, we need to go through those. Okay, the aim of this unit is to enable individual to understand the taxation as it affects small medium enterprise and the small and medium practices, to provide individual skills and prepare the basic tax and advise at this. That will go through. I'm using most of my handouts BPP and Kaplan, so those will go through and the different scenario will come. Okay, yes, please. Always good to be when we start any activity. Always good to be reflect. Grant your knowledge. What do you think? where you 1 to 10, scale 1 to 10. If you reflect, please, where you are at the moment. Scale 1 to 10.
7, I would say.
A 7. Okay, good. 7 is really good. So, well done. Anyone else, please, if you want to reflect? What do you think? If you can't speak on the mic, you can even. Sorry?
I'll be about number 3, I think, for
Numbers. Fair enough, if you're not dealing with the text, maybe not aware of the text rule, because that sometimes it's not so easy, because it's carry on chaining and always the legislation side and compliance side and your client scenario is carry on chaining. So fair enough, brilliant. Okay, thanks for a reflection. Anyone else, you can reflect as well, even in the chat boxes. Okay, always good to be. And at the end, you can see, anything we picked at the end of the unit, we can reflect as well. So that's the indicative content which we'll go through. I mentioned you earlier. So this year rates, we know the rates. Yes. Do we know the capital allowance? We're looking the Finance Act 2020, not 21. Huh? Okay, so what do you think? How much is the personal allowance? We all know. Yes. 12,500.
Yep.
Up to 12,500.
Yeah, 12,500 for last year, 2020. I think this year it's gone up, 12,570 or something like that.
Yes, it went up, so we up to the 31st January next year, if you do the self-assessment someone's, if you didn't, until, so you can use, these finance rates. Normally nowadays software,
Sorry, you mean 6th of April 2021 to the 5th of April 2022 is a new threshold. 12.
Your year end was 30. This year your 2020. Yes, you're supposed to be due return up to the 31st January 2021. Yes, if you do online.
I get what you
that was applicable. Now from this year, you're right, that will be Finance Act 2021. And we can do return up to 31st January 2022. Yeah, if we do, that's the last. After this will be penalties involved. Huh? Is it clear? We all clear, no? Okay, then is it personal allowance always will be the same? What do you think? Personal allowance always will be the same?
It varies depending on the mood of the chancellor of the exchequer. It changes really.
No, yes, that's your right. Go up and down, not normally up, but as an individual situation, it can be varied. So maybe you're not entitled 12,500. The reason, if you have a company car,
if you're earning over 100,000, you don't get the full 12,500.
You're absolutely right. Then it will be go down accordingly. Okay, like if you have a company car, you're not entitled 12,500. Yes, because you're getting the benefit from the car. Your allowance will be goes towards benefit. Okay, that change. If you're spending money towards your job or anything, and your employer can adjust it, it can go up to 13,800. Your tax code, or 14. You can adjust in the tax code, and of course, employer has the right to, and they can inform to HMRC. Okay, any question in this regard? That's all dividend we've been given first 2,000. Yes, nil rate. If anything more than that, your rates will change. So here is the tax planning will come as well, if you inform to your clients. So that we can look around. Okay, resident status, you need to be look around the rules against it. So tax implications, car benefits, car fuels, individual saving accounts, property income, pension scheme, mileage. Yes, 45 still I think so is same as well. We can go back to and hit gov.uk and we can further explore is it went up or down. So still according to my knowledge is 45 pence. Yes, over 10,000 is 25 pence. What you so you have to really guide the client. If you have a company car or you claim the company this is the mileage. Which one is a better? Sometimes client can ask you these questions. Okay, so tax planning is
Sorry, Angel. The capital allowances, rates of allowances, it's for the Income Tax Act, isn't it? But as per the Companies Act, it will be a different rate, isn't it?
this capital allowance can be if it's an individual business, yes.
Okay.
Yes, companies is slightly different. They have more relief available. Annual investment relief, AIA. Yes,
Okay.
different. So each year we need to look around for the companies.
Okay. So the
They
rate will be totally different, isn't it? It won't be like a Tax Act.
a little bit different. Yes, they can do self-assessment as well.
Yeah, that's
Okay,
fine.
and
Yeah. Thank you.
welcome. Okay, then next we have annual investment allowance. Yes, different sector. Those we need to look around. Cash basis accounting. If we in the corporation tax we have a 19% value added tax which will go through 85 still is kept, and inherent tax that's the 325,000 nil rate, and afterward and the lifetime and the 7-year rules as well, and the connected person that's we need to look around. Capital gain tax, yes, normal rates, residential properties, yes, all these we need to go through the individual chapter to look around the scenario, which we can. And then we have a national insurance, yes, rates. We know if you're a self-employed, up to which limit we don't need to pay NI. Do we know? Yes, if you register. So £8,632 per year if you earn, you don't need to really contribute NI. Yeah? But you can pay voluntary if you want to. Okay, then we have these. Then we have interest rates as well, official rates. That's HMRC charge if you don't pay or you have outstanding liabilities. Then we have a deliberately, yes, standard penalties for errors. So these are all there. So that's we can look around. Or the UK tax system, we know the types of tax can be direct, indirect. We can look around the ethical framework, how we can, and what sort of ethics. So do we know ethics? All accountants need to be obeyed. Any awarding body really you dealing in accounts, especially. Do we know what 5 professional code of ethics? Anyone? What those are, please?
Integrity, objectivity.
Good, well done. To remember easily, you may be observed.
Professional behavior.
Excellent, well done.
Professional behavior, integrity.
Okay. Yes, you're right. Good.
Confidentiality.
Excellent. 2 left. Okay.
Popular people chatting off you.
Yes, people chat in office. So popular people chat in office to easily remember. Excellent. Chat in office. So you can say first P is the professional behavior. Second P is the professional competencies and due care. Professional competencies and due care mean up-to-date knowledge. Always in tax, we have to do CPD. If we don't do CPD regular basis, we can stay and maybe we don't have exact information. Yes, so we need to be really up to date, if especially in your practice. And of course, nowadays, is a software we put the figures and ultimately, rates behind carry on updating the software company. Okay, C is confidentiality, I is integrity, and O is objectivity. All these we have to be follow as a professional person. Okay, self-assessment. So our first is explain the nature and the purpose of self-assessment. Why self-assessment? Why we do self-assessment? So self-assessment is a system HMRC revenue used to collect the income tax. Tax is usually deducted automatically from the wages, pension, and savings, and the people and businesses and other must report it into the tax return. So we been given, of course, if you're registered, you have a UTRN number. Do we know all UTRN? Yes, unique tax reference number. So you have to be registered with the HMRC for UTRN number, and then of course you can submit your online tax return as well. Okay, then move a little here. So sole trader and partnership. Normally in that case, we have to do the self assessment. It company can do as well, but income from the businesses, trading and the profit and other income is personal. So income tax calculation of the income tax liability will not be required in this assessment, but we have the gain on the disposal of asset and other gains. Yes, we look around the farm as well. So tax years and the financial years, we know all what is the difference between them. Tax year and financial year, if your year in 31st December, what you do? Your business year end, yes, 31st December, what you do now? How you will do the tax? Anyone? We all know, yes. Is it fall in one financial year or is it two financial years? It start 1st January, for suppose, yes, and finish 31st December. So you have to be really proportion, which will go through some scenario. Okay, next now, financial years run from 1st April to 31st March, and company tax rates are the set the financial years. And you're dealing with mainly with the financial year 20.
Sorry, Andrew, I think you made a mistake. You made, yeah, it's 6th of April to the 5th of April, the financial year, isn't it?
Yes, for the tax purposes, you're right. Yes, but normally, in the books, it run from few days, huh? You can include.
Company account. Okay,
Yes,
but the government tax year is 6th of April to the 5th of April the next year.
yes, you're right. Okay, the UK tax system is the money raised by the states, yes? We can look around. That's why we have a finance act as well every year. There are the legislation. We can use the case laws as well. A lot of, the case laws can be on the various scenarios. Okay, which one is the legal, which one not legal? Tax planning,
Legal, yeah.
it's illegal. Tax avoidance,
It's legal but unethical.
unethical, and that here is the tax avoidance.
Both illegal and unethical.
Hey, yes, good. So that's, is we need to, and if we do the self-assessment, and we have a form here, you can copy and paste the link, yes, and we can look around further. We'll look around the form in the further slides as well. Okay, and that's we need to fill. We can fill all the boxes. Okay, next we looking when we dealing with the self return, self assessment, self implied. We need to be implied. Yes, self implied. If we have a property income, if we not declared in the past, we can. And following tax years. Okay, what about the losses? Do we know the losses? How long we can carry forward? That's really planning area as well, huh? What do you think? How long losses can be carried forward? Anyone?
I
Okay.
don't know, but I'm guessing 3 years. I don't know.
It can go up to 4 years, huh? Plus current year.
Okay.
So then payments, we can look around the class 4. We can look around the capital gain tax if you have due dates online 31st January, and if any inquiries on the time within the following 1 year of, or how long back, if you not claim things, you can go up to 5 years, huh? After 5 years, and how long we need to keep the record. If your account and your client record, how long you need to keep?
Yes.
6 years.
6 years. Yes.
Yes.
Plus we can say the current year as well. Okay, then errors, if you make these penalties, can be late payments, can be, yes, 1 month late 5%, 6 month late 5%, and 12 months late is a 5%. Trust late payment submissions, £100, yes, next day even. If more than 6 months, £10 per day. That's a huge area. Those are people are missing. 6 months, 5% of the tax due. Minimum 300, maximum can go more. So these all, the implications we need to be informed to clients for the self-assessment. Okay, so this is about test your understanding question. Can you can try your end. I can go through if you can test your understanding. You can look around the dates, select the correct answer for the 4 questions from the 4 pick list, which will here you've been given. So please you can try before next lesson, and I can give you all the answers as well. Okay, that's I set some activities for you. Okay, these are all the activities. Test your understanding. You can try, and otherwise I'll go through. Okay, determine taxable amount and calculate the taxable for the given scenario. So can we look the scenario which we've been given 1.2? We've been given income tax liability 7,000, pay tax deducted at source from the employment income 4,000, capital gain 5,000 is tax for 2021. Income tax liability, pay tax deducted at source from employment, and the capital gain. And we need to calculate the now payment on the account and the balance payments. Okay, thus we need to be calculate the liabilities. Then we been in the self-assessment.
Sir, can you go back to the last slide, please?
Yes, sure.
So here, capital gain tax on the top is 5,000, and oh, that is for 1920, and the below one is 2021, right?
Yes, two different.
All right.
So now we are doing this being solved here. So if we look the 2019 and 20 income tax payable 7,000 we paid, yes, for 3 the payment on accounts for 2021 31st January, because it falls, it is, yes, 1500, yes. Okay, that we can make the payment in this way. Okay, the final payment is therefore income tax liabilities 8,000 less, if we have a pay we paid through and the less payment on accounts. There was 2 payments, 3,000, and then we have a final, and then capital gain tax up to the 31st. Final payment can be 3,500. 25 plus 1,000, yes, and that's we need to be make up to that point. Any question here? Okay, so we'll go through the lot of question on this. I'm going to send you good few question. Okay, just 1 second, I'll share with you. I'm going to send you some scenario based question. Can you see? Yes or no? Hello?
So
Can you?
is a complete self-assessment tax return from given data
Okay, you can't see it there. Okay, no problem. I'll share with you. I think so. Need to click the window. Can you see this one? Yes. Okay. So I'm going to send you whole this the chapter we have within. We have the scenarios like if we submitting the late return, then we have a test your understanding. We have a chapter here, self-assessment for individuals. Huh? Okay, so I'll send you this booklet, because this is electronic online copy, so I'll use the snipping and I'll send you making the handout this separate for you to do look around for the before next lesson. That will enhance our understanding in different scenarios. Huh? If anything you not get it, then we can go through in the second lesson before start our second lesson. So we'll carry on doing every week the topics which we have. Huh? We have the booklet where we have a lot of scenario. So if you want to be if anyone knows Open Tuition, have you tried Open Tuition?
Yes.
Okay, good. Okay, if you can set up your account absolutely free. The reason I'm telling you, because you can do and look around the different scenarios, and you can download the booklet as well. Huh? So if you log in, it's absolutely free. Look around under ACCA, and then we have a tax fair. Yes, Tax UK. So you can download the booklet as well from here if you want. So, and then of course we can go through. We have latest. This is Finance Act. They normally set up according to exam, so you can click. I can send you this booklet as well with all the answers will be there. Any question from anyone? Okay, so where we have all the scenarios as well. So we can pick any scenario for assignment purposes as well, which we can when we'll go through assignment brief. So I'll guide you accordingly. Okay, let's move back. Okay, so then we have the payment corporation. If you do the self assessment for the corporation for the companies, so we can look around. Of course, there is a 19% tax. Huh? The due installments we can look around. Yes, we can make installments in companies. What liabilities? So that I included one example for you as well. Okay. Any question, anyone? Okay. Then return when we do, if we, of course, we know up to 31st penalties, all the details about penalties if we don't submit it. Yes. So maximum careless penalties unprompt disclosures if you don't do it. Yes, what can be, and all the details about penalties is here, and I included for you to be look around as well, which help us, to be further enhanced. The payments on accounts must be made 31st January. If we don't do it, it can be late. So 50% of the prior taxpayer liability less, suffered at source, anything. We need to be look around those interest and the late payments in the self-interest. Okay, next we have ethical issues arising the course of performing the tax work. Factor we need to consider subject matter. If an asset you purchase is not, the personal or the investment you use, but for the stock or the inventory, then indicate trades. Uh, if you have a brief period, ownership indicates, yes, you own it, who else own it. So that's we need to declare as well as ethical issues, frequency of transactions. We need to be make sure it's which years they falls. Yes, that's all we need to be declare. Okay, then supplementary work and the improvement advertising any asset brought and enhanced and then sold it. So the implication of the tax, that we need to, if you forced to sell because of the cash flow, the crisis, it's less likely to be disposed in the course of the trade. So we need to look around those issues as well. Is ethical, the presence of the profit motive indicates. So all we need to, and we've been given the abbreviations, we need to look around the subject, ownership, frequency, improvement, reason for sale, and motive. And if it is a trade, then the profit or the tax on the trading income. Okay. Then adjustment of the profit and the pro forma we've been net profit per accounts, disallowed expense. What about the depreciation? Depreciation is allowed expense. What do you think? For tax purposes?
No.
No, it's not. So in your profit and loss, if you throw depreciation, you need to be added back. So that's, and if we are allowed expenses, you minus like capital allowance as well, and then your trading profit, and then tax, of course, we can calculate. There are many software, Alpha Tax and various others, a lot of companies using, and those are integrated with HMRC, of course, those auto updates, as long when which is we need to put the figures right, and give the right, the information as much we have. Disallowed expenses are the same as the company, and adjustment, for the private expense. That's, we need to be, because the business and the private, that is very gray area really ethically and morally. Here more moral come. Sometimes people using the company car for personal use, but not declaring. Yes. Uh, Salaries, proprietors, drawing, that's, huge area. You're giving your own asset to the company. Yes. So all these, we need to be look around that further areas, NI contributions. Okay. Then the general provisions, unincorporated business not bound to be by the Company Act requirement. So we're not really bothered as a sole, but we can in term of the companies for the self-assessment. Okay. Thus we need to, okay, next we can item not included in the accounts, but the taxable goods taken by the owner for their personal use. So that's we need to be look around benefit in kind. Yes, for personal use, withdraw, expenses not included in account but allows the business paid privately and allow payable there. And there are the other areas as well. If you living in a hotel and going abroad, and how much is it? So that's all the separate rules as well. Capital gain tax, especially in shares, in taxations, we need to be each area we need to go through separate. So capital allowance, we need to look around written down allowance, annual investment, trading allowance, how much we have authorized each year. So that's other areas. Then we've been, of course, end of the day, we have to fill the form for the self-assessment. So blank form self-assessment. Okay, have you filled, are you filling your, for your clients? Yes, you're dealing with your clients, self-assessments? Yes, normally we are filling mostly online, not paper copies, but you can do paper copies as well. Okay, that's explain, how they determine the tax status of the worker. What basis? Is it resident or not resident? We know all. Is there any requirement? What you think? When residency cancel, your benefits stop. How long you stay abroad? If you're out of country.
Number of days stayed outside.
Yes. So that's, we need to keep in mind, because that's, the UK resident income tax on the UK and overseas income, non-resident income tax on the UK income only. You don't have to pay overseas. Determination of the residence follow tests in order: automatic non-resident, automatic UK resident test, and the consider, the number of ties and the number of days spent in the UK. So domicile is only relevant to the inherent tax, acquired, the father domicile birth until 16. Any changes father's domicile, that's, we need to keep in mind as well. Okay. From 6 April 2017, it is no possible individual to be deemed domicile. This means even if they are not domicile, they will be treated as a UK domicile for the tax purposes to meet the condition A and B. So these are the conditions we being given. The individual born in the UK, the individual has the UK domicile, or the individual was the UK resident in or later. So the individual has been the UK resident at least 15 out of 20 tax years immediately preceding the tax. Okay, that's, all these rules we need to keep in mind, and that will apply, in the tax purposes as well. Okay, evaluate the obligations, tax payers, and implications of the tax non-compliance. So we know the in the exempt, we need to declare. If we don't declare it, what complications can be? Grossing up, we need to make sure, like, the tax at deducted at source, you add it full, and then you minus it, at the whatever you paid it, and of course in our declaration. Okay, then this is the form normally we can for the income tax calculation: non-saving income, employment, then saving income, dividend income. Okay, then we have the rates we can apply, and we'll go through some, the question in next, bit. So that's I can send you. So this booklet, please. And before, if we can look around some self-assessment for some individual questions, it will be great. And I'll send you the test your understanding questions. So here we've been given all the areas, like if you're looking dividend, if you're looking the properties, if you're looking, we're dealing more self-assessment. So we have a capital gain tax for individual, shares for individual, relief, self-assessment, and the payments for individual. Chapter 15, please, and page 95. So we can look around before next, so that will help us to enhance our understanding. And the UK tax system was, as we have chapter, and these two, is a part of our today lesson. So we can look around the before next lesson from this handout, chapter 15. Okay, I'll do other handouts as well, BPP and Kaplan. So we can look around different scenarios. Any question from anyone?
Sir.
Okay, so maybe we've not done many questions, but at least overall, and then of course test your understanding questions are there. So at least we can look around few, and of course main thing we need to look around the rates and apply in different scenarios. The application, which we'll go through some questions. Okay, that's all today. So today we'll learn about the self-assessment, self-employed, and individual more, and the next lesson we'll go through the corporation. then we'll go through the VAT. That's
Sir.
Yes,
Sir.
please. Yes.
Can I ask you a question, please?
Yes, sure.
We talked about the this benefit in kind if we have a company car, and then the individual allowance could go down depending on the value, benefit. So what will happen in terms of if we payroll the benefit?
If you're on the payroll.
No, let's say that employee who has the car in the company.
Yes.
And we determine the P11D value, and then we payroll every month that value.
Yes, so we need to be basically we can say in our the system we can inform to the person has the company car. Yes, the tax code HMRC change it and update in the system automatically. So we just need to submit it all. The auto tax will be applied. If any more or less, this can be auto adjusted.
That value, if we payroll that value, and individual decide to pay tax every month, depending on the value of the car. Depending on the value of the benefit. Then still
depending on the value of the benefit, individual tax will be adjusted in the tax code. So your free limit can be reduced to 6,500 instead 12.5. So that will your tax code can be 670L for suppose, instead of 12.5L.
Yeah, but the benefit if the individual decide to pay tax every month on the payroll.
Individual can make arrangement. They can inform to the payroll department. They can make adjustment accordingly, or they can inform to tax office.
Okay.
They can. And this is the criteria we need to look around the benefit, car benefit percentage. Okay. So if you want me, I can send you just benefit in kind, the chapter, so we can look around the different scenario. Yeah, there can be many things. Yes, not just the car. All other chattels and various others. The exempt areas as well. Okay.
Okay.
Welcome. Anyone else? Any question?
No, thank you.
Okay, welcome. Okay, thanks guys. I'll speak to you all during our next lesson, and in between, if you have any question, please drop me email. And these slides will be available. Handouts will be available on Moodle as well. So please go through. And in between, any question, drop me email, and I'll speak to you all during our next lesson. Thanks for listening and attending. And hope so. Speak to you all. Thank you. Bye bye.
Thank you.